A very warm good afternoon. This is CS Mamta Binani, the President of the Institute of Company Secretaries of India, and with warm greetings, I welcome all of your good selves, my esteemed members, my precious students, and the precious stakeholders joining from across the length and the breadth of the country. It gives me immense pleasure to mention that ICSI, that is your own very institute, is conducting its webinar classes on the much awaited goods and services tax. And it is immense pleasure that we have opened the web link for our precious public to see it at large. And I'm sure with this webinar series, which is kicking off today, a lot of people will get benefited. Friends, we do understand and we are conscious of the fact that the contours of the GST over a period of time with the consultative process may undergo changes. But the basic framework of it is very important for us to know, and hence the Institute of Company Secretaries of India thought it appropriate that this kind of sensitization sessions should begin very quickly, and hence here we are serving everything on this palette of ICSI, and we promise that on times to come we will keep on serving the nation with such classes and much more. Recently, I would like to thank the Government of India for this, that they gave us an opportunity to present our esteemed views and suggestions in front of the very important GST Committee of State Finance Ministers, the GST Empowered Committee of State Finance Ministers. We are very thankful to Shri Amit Mitra, the chairperson of this committee, and of course all the esteemed State Finance Ministers and Chief Ministers, sirs, who are handling the additional portfolio of Finance Ministers, to have heard our concepts, our suggestions and observations. Apart from this, friends, the Institute of Company Secretaries of India has been endowed with a lot of important responsibilities given to us by the GST Commissionerate, for which we are very thankful, because that shows the confidence and trust that they repose on your own institute. Friends, it gives me immense pleasure to mention that ICSI has been celebrating the GST Awareness Months. And in this series, we have not only been doing these webinar sessions, but have published a very special issue of our Chartered Secretary completely devoted to GST. We have also formed a core group and a larger group which is delving on the GST issues. In fact, from now onwards, we are also going to come out with a series as to how specific sectors of our economy will get positively affected, or maybe some challenging areas on implementation of GST. Today is a day to reckon with. Of course, 3rd August and 8th of August were the golden days which after independence each citizen will cherish from henceforth, because 3rd August and the 8th of August actually set the ball rolling for GST Constitutional Amendment Bill. And after that day, in fact yesterday, we saw that 16 states have already given their assent. The threshold limit has been crossed. 16 states have given their assent as a go-ahead to this GST Constitutional Amendment Bill. And today we had the 17th state giving its approval, that is the state of Rajasthan. It kicked off with the state of Assam, and it's an immense pleasure that I also belong to the eastern part of the country, and Assam was the first state to really give a go-ahead and a kick-start to this process. Friends, is the goods and services tax a new concept for the world? Of course, no. We know that in 1954, in fact, way back in 1954, France had the GST in their own country. And we also know that 140 odd countries already have GST rolled out in their own countries. And Malaysia is probably the last one, and now India is also in the row. Having said that, and having known the numbers, which is 140 plus, it is sure to say that GST has its inherent benefits. Our Honorable Prime Minister, Sir Shri Narendra Modi ji, has of course mentioned that GST means great step towards transformation. So G stands for great, S for step, and T for transformation. Great step towards transformation. He also went on to say great step towards transparency. And towards the end, he said that this will probably end tax terrorism. But to us, of course, GST is goods and services tax, and I'm sure this is going to bring a great, great benefit to our economy. Friends, to talk on the nuances of GST, I have a very special speaker with me, Dr. Sanjeev Agarwal. He is a member of the Institute of Company Secretaries of India and also my brother institute. But more than that, he is a person of high standing and has been delving on the VAT issues, of course prior to GST, on VAT issues, on service tax issues, and he's a name to reckon with. Apart from that, let me mention that he has been writing several books on the said subject, and he has recently come out with a very valuable contribution on the GST subject. With these words, I wish this GST webinar series a very meaningful and healthy discussions. At the end of this series, you will have question answers open to you. And as an institute, I commit, and when I say I subsume my entire council in myself, and I subsume my entire stakeholders in me, that we would not leave any stone unturned to make sure that we bring the best value to my precious stakeholders, that is you. Jai Hind. Over to you, Mr. Agarwal.
Thank you. Thank you and good afternoon to all the stakeholders of the GST. As rightly pointed out by Mrs. Mamta Binani, the President of the Institute, we are having a series of webinars on goods and services tax. We call it master classes, and today being the first one, we will try to cover the broad overview of goods and services tax and what are the professional opportunities to the professionals across the country. We will have a structured presentation, friends, and I would suggest that in case you have any questions, you can send the questions to us, to which we will be answering at the end. To start with, let us look at what the economy is, friends. Today the Indian economy is the 7th largest economy in the world, and we are the fastest growing economy in today's global recession. If you even look at the world's economic growth, it is growing around 3.1%, whereas the Indian economy is growing at the rate of 7.6% in 15-16. And the growth of the economy, if you look at, is going to be in the range of 7 to 8%. 8 to 8% is now we are talking of. IMF has projected a economic growth of 7.3%, Modi 7.5%, OECD talks of 7.4%, but with the good monsoon this year and the pay hikes which is going to happen because of the 7th pay commission, it is expected that the consumption in the country will improve and we may be able to cross 7.9% or touch around 8%. Now, what is the trigger for this economic growth? While the economy is growing at the rate of 7.6% or so, the service sector is growing at the rate of 9%. That is much higher than the economy itself. And the tax GDP ratio, but is around 10.7%. It's so for last couple of years, and that is one of the worries of the government, that with the growth in the economy and the growth in the revenues, the tax GDP ratio should also go up. The good thing about our economy is the growth is being driven by domestic demand. It's not affected by the happenings in the global arena, and the economy is growing because of the domestic demand. It could be because of disposable incomes, changes in the food style, lifestyle. These are some of the growth triggers. If you look at the indirect taxes, today what happens is our indirect taxes comprises of central excise, customs and service tax, and the contribution of all these three major indirect taxes of the union government is by and large equally divided, with central excise being a little higher at 40%. Now, what are the important sectors of our economy? We have agriculture, we have services, and we have industry. These are three major sectors of any economy, and so is the case with our economy. And the sectors in the services arena, which are growing much faster than the economy itself, are financial services, communication, hospitality, professional services, and thanks to the quality of education in our country, these sectors are growing. Now, this is the composition of our economy, friends. 57% today comes from service sector, 18% from agriculture, around 25% from the industry. As a student of commerce and economics, all of you would agree that we have learned that when India became independent, we were known as an agrarian economy. We used to learn that India is an agrarian economy, At that point of time, around 67 used to come from the agriculture sector, but today it is a complete U-turn with 57% coming from the service sector. Now, why I am saying you all this? Because the composition of the GDP is very important for us. Today, agriculture is not taxed, so 18% is out of the tax net. All of us know that. So remains what remains is 82%. Today, we are talking of GST. We are talking of a tax which is going to be taxed as a single tax for the entire economy, because GST is a tax of goods and services. It would cover service sector as well as economic as well as the manufacturing sector. So 57 plus 25% is 82%. Virtually the entire economy is going to be taxed by way of a single tax, that is goods and services tax. If you look at the taxing powers of the in our country, the taxation is governed by Schedule 7 of the Constitution of India, which is now subject to change with the constitutional amendments. We have a 3-tier federal system in India, wherein we have union government levying taxes as per the union list A. Then we have state governments, including the urban and rural local bodies, which levy taxes, and then we have a concurrent list where these taxes could be levied on the items by union as well as the states. Presently, the goods are liable to tax as value added tax, we call it VAT, central excise, customs duty, and services are taxed as service tax. So these are the broad taxes which are on which the taxes are levied by the union government. VAT is of course levied by the state governments. Then certain transactions are subject to both VAT as well as service tax. For example, you take the supply of food in the restaurants, we take the example of IPRs, we take the example of works contracts. So we have certain subjects on which the taxes are levied, both for VAT as well as for services tax. Now, over a period, what has happened is there have been lot of efforts done to revamp the direct tax structure, and as of now a committee is working on the improvements and rationalization of the direct taxes. So far as indirect taxes is concerned, today we are talking of GST, that is the tax which is going to be which is proposed and which will take care of all the present taxes which are indirect taxes. Now, if you look at the taxation powers of the union, we have income tax right from 1961, we have excise duty of 1944, customs duty 1962, services tax from 1994, central sales tax 1956, we have stamp duties on various items, and we have the certain special cesses. If you look at this list, now what GST is going to do, excise duty of 1944 gets subsumed with the GST, the service tax of 1994, which is 22 years old now, that also gets subsumed. Part of the customs, that is the additional duties and special duties, will also get subsumed here, and couple of cesses will also get subsumed. Now, let us look at the taxation powers of the state. The most important tax revenue for the states is VAT, that is the value added tax, which is levied on sale of goods. Then we have stamp duty, we have taxes on certain types of agricultural incomes, we have toll taxes on utilities, we have certain specified cesses, and there are certain other taxes on properties, land and buildings, entry tax for goods in the local area, which is known as entry tax or octroi. We have consumption or sales of electricity, we have taxes on luxuries, which is entertainment tax, luxury tax, betting and gambling taxes, certain taxes on alcoholic liquors, narcotic drugs and opium, etc. These taxes are levied by the various state governments. Now, having gone through this list of taxes which are levied by central government or the state governments, now this will give you a bird's eye view of what are the taxes which are the major indirect taxes in the country. We have excise duty, we have service tax, we have customs duty, and we have sales tax or VAT and central sales tax, we call it CST. The bottom column of the slide would tell you what are the rates which are on which these taxes are levied. We have a median rate of 20.5% of central excise, we have a service tax rate of 14%, and to that we have two cesses of 0.5% each, that is the Krishi Kalyan cess and Swachh Bharat cess. Then we have customs duty, and then we have sales tax. So the taxation burden in the country is broadly, so far as indirect taxes is concerned, is divided by these 4 types of taxes. Now, why do we talk of GST today? We talk of GST today because in the current taxation system there are certain drawbacks or shortcomings. Now, let us dwell upon these shortcomings, because of these we are migrating from these taxes to GST. Now, firstly, there is a confusion or lack of clarity on the various provisions. So, when the law is complex, then certain interpretational issues also emerge. So, today the present tax laws suffer from the lack of clarity, and there are a lot of interpretational issues which lead to some certain disputes between the assessee and the tax collectors. So, which ultimately leads to the lack of trust between the assessees and the revenue. Classification, exemption issues, valuation are some of the areas where the disputes are higher. Then there is a complexity of provisions and lack of consistency in provisions. Every year we find in certain areas the provisions get changed, the law changes, the procedure changes. So, so far as assessee is concerned, he is not able to comply with the law because of the inconsistent provisions and the frequent change of provisions over time. Then we say that we have to export the goods or services, but tax should not be exported. That is the basic philosophy, and there are no taxes on exports. So, there on so far as exports are concerned, there are hidden taxes, and we have a tax on tax. So, we deal with the situation, we are living in a situation of cascading effect. So, when you pay a tax on one part of the transaction, on the other part of the transaction again you pay on tax on that on a comprehensive value. So, we end up paying tax on taxes. So, that is a cascading effect which will get addressed by the GST. And today, because of lot of exemptions and lot of small taxes, we have a very narrow assessee base. GST is a tax which is a tax which will be levied on supply as a destination based tax, and it is going to expand the tax base or the population of the taxpayers in the country. So, with that the assessee base is going to explode, and everybody contributes to the economy, to the exchequer by way of taxes in a small way, and the revenue also gets multiplied. And today, because of the small taxes, because of the multiple compliances and compliance with various laws, the cost of compliance is high. It results in a high compliance cost and high transaction cost. And as I told you earlier, there is a lot of litigation and disputes because of the inconsistent provisions and provisions which require interpretation, which could be different from the taxpayer's angle and different from the tax collector's angle. Then in certain states, the tax practices are not also harmonious. The tax practices, the provisions, the interpretation, they vary from state to state. The turnover in A state would be defined differently, the turnover in B state would be defined differently. Government has been working hard on improving the problems in the tax policy and tax structure. Over last couple of years, what has happened is there has been the introduction of VAT in early 2000. Prior to that, sales tax was levied by all the states. Today, sales tax has been replaced by value added tax, that is VAT, by all the states and union territories. The central sales tax, or the CST, that is also getting merged with the GST in times to come, and GST will in the GST regime, the CST is going to be subsumed by way of a tax called IGST, which we will discuss a bit later. Then there has been introduction of service tax by the center, and there has been substantial expansion of its base over the years. In 2012, we migrated from a selective approach to a comprehensive approach, that is a negative list approach, and today most of the services, barring the negative list services and services which are exempt, are not under the Service Tax Act. The SANVAT credit system is one system wherein you can take input credits, credit of the input taxes which you have paid while manufacturing the final product or providing the final output service. So, this SANVAT credit system has been very complex, but over the years efforts have been made by the government to improve and rationalize the credit system, which is in the interest of the economy. Then today we talk of self assessment, we talk of online registrations, we talk of e-payment, we talk of e-filing of returns. All this has been possible because of the electronic platform, and the interface, physical interface, the personal interface between the department and the taxpayer has been reduced to a substantial part. Then self assessment, we do not go to the department for assessments now. There is a system of self assessment both in direct taxes as well as most of the indirect taxes, and because of that compliance has become very easy. Then in last couple of years, what has happened, the government is trying to reduce the litigation, and to do so there have been various dispute resolution schemes. So far as indirect taxes is concerned, we have a ongoing scheme called IDRS, that is the Indirect Tax Dispute Resolution Scheme of 2016. Prior to that, we had VCS 2013. So, all these attempts have been made to improve the tax structure and compliance level in the country. Today, the service tax is levied on a very comprehensive way. So, this slide would explain you what types of all services are taxable. Today, every service, every activity which falls within the scope of the service is taxable, and not only the service is taxable, there are certain other services which are considered as declared services. They are not services, but for the purposes of levying service tax, there are 10 services which have been identified as services. For example, supply of food in a restaurant, the IPR services in relation to the development of software, renting of property, construction services, works contract services. These are 10 services which are considered as declared services on which service tax is payable. If you look at the left hand side of the slide, there is a word written E-magic. E stands for employees, M for money, A for actionable claim, G for goods, I for immovable property, and C for court fees. So, any service in relation to these are not part of the taxable service, and there is no need of paying service tax on the services which are provided by employee to employer, transactions which are in money, transactions in relation to actionable claim, transactions in goods, because on goods you pay either excise on manufacture or we pay VAT on the sale of the goods. Then we have immovable property services on which we pay stamp duty, and any fee paid to any court of law or tribunal is also not considered a service because it is a sovereign service. Then we have non-taxable, we have negative list of services which is 15 in number, we have 63 exemptions. So, if you filter the universe of services, you get what you will get is the taxable services. Today we pay service tax comprehensively on these activities. Now, let us come to goods and services tax. Next 1 hour or so we will discuss what is goods and services tax, why there should be a tax called goods and services tax, and when it is likely to be levied. Now, what is GST? GST is basically a common tax levied on goods and services. What it will do? It would be integrating the taxes, all taxes which we discussed now. It will give a boost to the growth of the economy. It will create a national market, and compliances are going to be easier.
कल मेरे बेटे ने मुझसे पूछा कि मामा जीएसटी क्या होता है। अब मैंने सोचा कि मैं बहुत सिंपल तरह से उसे बताऊं, और मैंने उसको कुछ यूं समझाया कि मान लो तुम्हारा बर्थडे है और तुम्हें पता है कि क्लास में सारे बच्चों को तुम्हें जाके चॉकलेट देनी है, तो डैडी एक रात पहले ही चॉकलेट का पैकेट लाए हैं। दूसरे दिन डैडी तुम्हें लेके घर से बाहर निकले स्कूल जाने के लिए, लेकिन पड़ोस की रश्मि आंटी तुम्हें मिल गई। उनका बेटा टिंकू तुम्हारी ही क्लास में पढ़ता है। रश्मि आंटी ने तुम्हें हैप्पी बर्थडे विश किया, तो तुमने एक चॉकलेट निकाल के उन्हें दे दी, साथ में टिंकू को भी एक चॉकलेट थमा दी। अब तुम दोनों स्कूल पहुंचे, डैडी ने स्कूल में छोड़ा और जाते समय हैप्पी बर्थडे बोलकर निकल गए। स्कूल के गार्ड ने यह बात सुन ली, उसने फट से तुम्हें हैप्पी बर्थडे विश किया, तो तुमने एक चॉकलेट निकाल के गार्ड को दे दी। अब तुम स्कूल के अंदर पहुंचे, टीचर ने पूरे क्लास में अनाउंस कर दिया कि आज तुम्हारा बर्थडे है और तुम सबको 2-2 चॉकलेट्स दोगे। तुमने सबको 2-2 चॉकलेट्स दे दी, साथ में टिंकू को भी दोबारा चॉकलेट मिल गई। लेकिन तुम्हारा बेस्ट फ्रेंड गौरव आज एब्सेंट था, और स्कूल का रूल कुछ इस तरह से है कि अगर उसने छुट्टी की है तो उसे चॉकलेट नहीं मिलेगी। तो अब यूं समझ लो कि तुम्हारा बर्थडे जो है वो तुम्हारा बिजनेस है, और ये जो चॉकलेट्स हैं ये टैक्सेस हैं। रश्मि आंटी को तुमने लोकल टैक्स दिया, स्कूल के गार्ड को तुमने एंट्री टैक्स दिया, सारे बच्चों को तुमने दिया सर्विस टैक्स, और ये जो टिंकू है उसको सरचार्ज भी मिला। लेकिन गौरव, उसको बेचारे को कुछ भी नहीं मिला। तो ये थे मौजूदा टैक्सेस। अब जीएसटी क्या है? यूं समझ लो कि प्रिंसिपल ने एक नया रूल निकाला कि आज के बाद जिस भी बच्चे का बर्थडे होगा वो चॉकलेट का एक पैकेट सीधा प्रिंसिपल के कैबिन में जाके दे देगा। फिर ये प्रिंसिपल की रिस्पॉन्सिबिलिटी है कि वो चॉकलेट्स सारे बच्चों में, स्टाफ में और टीचर्स में बांटे। इससे 2 चीजें होती हैं, एक तो वो चॉकलेट बराबर सबको मिलती है, और इसमें चॉकलेट बांटने का जो समय होता है वो भी बच जाता है। जीएसटी यही है, बस अलग अलग जगहों पे, अलग अलग विभागों में अलग अलग टैक्स देने की जगह एक ही जगह पर एक ही टैक्स दो। अब कितना अच्छा आइडिया है ये। लेकिन इसमें किसी टिंकू का नुकसान होता है, इसीलिए वो विरोध करता है। लेकिन इसमें ज्यादा से ज्यादा लोगों का फायदा ही है। अब समझ गए जीएसटी क्या होता है? अगर अभी भी नहीं समझे तो चॉकलेट खाओ, खुद जान जाओ।
So, when we talk of goods and services tax, there are three important issues in the GST. There will be one nation, one market, one tax. So, what happens is, for the entire country, for the first time we are having a single tax structure that for the entire country, which a tax called GST, which we levied on goods and services. So, it is a tax which is on a pan India basis, as contrast to the present system of taxation in excise and in VAT. So, we have one market, entire India will become one market, and it will be a common market for all the states, and there are no entry barriers. So, we call it one nation, one market, one tax, which is going to boost the economy. Then another important thing about GST is we are migrating from an origin based tax to a consumption based tax. GST, friends, is a destination based tax or a consumption based tax. Today the taxation is origin based. We pay excise duty on the manufacture of goods, that is the origin. We pay service tax when we render the service, again the origin of a service, and we pay value added tax when the goods are sold, that is when the retailer sells the goods to the customer. So, these are the origin of the transactions. So, from here we are shifting to a consumption based tax. The tax henceforth in the GST regime will be levied only when the goods or services are supplied. So, no longer there will be requirement to pay tax when service is rendered, no longer there will be requirement to pay excise duty when goods are manufactured or when the goods are sold. The tax base shifts from the origin to destination. Another important change which is going to be there in GST is it is a transaction based tax, it is not activity based tax. Today taxes are based on activity of manufacture, activity of provision of service, activity of sale of goods. What is going to happen is it will become an activity, it will become a transaction based tax. And what is the transaction? Supply of goods and services. So, from manufacture, from rendering of service, from sale of goods, which were activity based, we are moving towards a tax regime which is transaction based. If a transaction of supply of goods or service will take place, the GST would be levied.
Sir, one market, one nation seems to be a very fashionable slogan in the tax market these days. With the coming of GST, is it really possible?
Yes, it should be possible, because today what is happening is the India is fragmented between the states, and there are lot of entry barriers. If you travel by road, you will find that when you cross a state, there is a check post. When you enter into another state, there is a check post. So, what is going to happen? All these check posts are going to be abolished. So, there is free movement of goods and services, and there is no entry tax, there is no octroi, and the goods and services will be flowing seamlessly throughout the length and breadth of the nation. So, and then instead of having so many taxes, we are going to have only one tax, that is goods and services. So, I do not think that one nation one tax is the wrong thing. One nation one tax is going to happen very soon in our country, and we are going to have GST, which is a single tax for all the economic activities in the country without any barriers. Then friends, let us now see what is goods and service tax. G stands for goods, S stands for services, T stands for tax. So, goods and service tax is a comprehensive tax. It will be a national level value added tax on goods and services. Why it is national level? Because it is levied across the country as a one tax. But when we say that national level value added tax, yes, it is a national level value added tax, but the tax is going to be divided into three parts. When we discuss it further, we will find that GST has three components, that is, one is central GST, second is state GST, and third is integrated GST. So, when the goods or services are supplied within the state, that is the intra-state, we will be having central GST or the state GST or both. But when there is an interstate transaction, in case of interstate transaction, there is going to be interstate GST, which will be called as integrated GST. So, the GST as such has three components: CGST, SGST and IGST. Then it is an indirect tax which is levied in view of taxes on goods and taxes on goods which is called like central excise, taxes on services which is called service tax, and sale of goods which is VAT or CST. CST is applicable today when we have interstate transactions. So, eventually what happens is GST is just like a state level VAT which is levied on which is levied on as a tax on sale of goods or services. Now, if you look at GST and the provisions and the proposed law, GST is a tax on goods and services with value addition at each stage, having continuous chain of set of benefits from the origin, that is the producer or from the service provider's point of view, up to the destination, that is the retailer level or the consumer level, wherein only final consumer should bear the tax. So, friends, mind it, number one, it is an indirect tax, and being an indirect tax, the tax is levied at every stage of value addition. It is not a tax which is levied at the origin, it will be a tax which will be levied at every stage, at every part of the chain in the entire supply chain, wherever value addition takes place. So, for example, when a manufacturer manufactures a good, the tax is levied. When manufacturer passes on the good to wholesaler, again the wholesaler pays tax on the value addition, then the retailer pays tax on the value addition, and eventually it is the customer from whom the entire tax will be recovered or collected, because it is an indirect tax. This is one way of explaining what is GST. The taxes on goods and taxes on services get merged with GST, and then GST has three components: central GST, states GST and interstate GST. Now, what is the meaning of goods, what is the meaning of services, and what tax is going to be levied? So, GST as the name suggests comprises of three words: GST, that is goods and services tax. For the purposes of goods, there is the definition of goods has been given, the definition of services has been given, the definition of tax has been given. So, goods have been defined to mean every kind of movable property other than actionable claims and money, but it would include securities, growing crops, grass and things attached to or forming part of the land which are agreed to be severed before the supply or under the contract of supply. So, what here is important is every kind of movable property. So, all movable properties will be considered as goods. It will also include securities, that is the stocks, shares, bonds, debentures, which has been and the securities have been defined in the Securities Contract Regulation Act. So, securities are also part of the goods, but it won't include immovable property. Another important thing about goods is that actionable claims and money are not goods, because these are the subjects which are financial in nature, and money is not been considered as good. In the present dispensation, service tax is also not payable on the actionable claims. Then movable property will not include any intangible property. So, intangible property is not a movable property, and being not a movable property, it cannot be considered as a good. And the definition of service is not here now, but it has been defined as a residual definition. It says services means anything other than goods. Today, the services have been defined in the present law. So, there is a big definition of services, that service means an activity between the two persons carried out for a consideration. That is the definition, and then there are certain exclusions and inclusions to that definition. But henceforth, the service has been defined, will be defined as anything other than goods. So, what is important is, if you want to know what is service, you should know what is goods, and anything which is not a good would be a service. So, it is a very comprehensive, very wide definition, and if you read both the definitions together, friends, you would observe that there can't be anything which is a third item, that is either neither a good nor a service. So, anything in the world, in this universe, would be either a goods or a service or a immovable property. So, the definition of service is very wide. Then tax has been defined to mean a goods and services tax levied on the supply of goods and services under the act, that is the GST Act, and it would include any amount payable under section 8. Now, let me touch upon briefly on the section 8. See, GST is a tax for the purposes of goods and service tax. We have section 8 in the proposed law which talks of a composition levy. So, in case of small businessmen, small service providers, small traders, where their aggregate turnover does not exceed rupees 50 lakhs. In those cases, they being the small businessmen, a provision has been made for a composition levy, that instead of GST they will pay amount not less than 1% of the turnover as a composition levy, and that will also be formed, that will also be considered to be part of the GST. So, this is what tax would mean. Now, if you look at the models of GST, there is a, we have, India is following a model of dual GST, wherein the taxes GST would be levied by union government also, it will be levied by state government also. Then there could be situations where concurrent GST would be levied both by states and centre, and there could be situations where non-concurrent GST would be levied either by the states or by the centres. The decision to levy GST on various subjects is yet to be decided by the empowered committee. They have to recommend, and then based on the recommendation it will be included in the law. Dual GST will comprise of central GST and the state GST. Central GST and state GST in themselves would comprise of both goods and services tax. So, what would happen is GST would be a tax on service also, GST would be a tax on goods also, and both the taxes would operate parallelly and to apply, and they will apply to all the transactions, unless there is it is a transaction on which the tax has been exempt. Supply of goods and services will be the taxable event. Today the taxable events are different under different laws. If you talk of luxury tax, the taxable event is the the supply of services by the hotel. If you look at entertainment tax is levied on the theatres who exhibit movies. In case of services, when you provide the service or agree to provide the service, that is the taxable point. Manufacture of goods of accessible goods is the point of taxation for the purposes of central excise duty. So, today we live in an era where the taxable events are different under different laws. Now, in GST what would happen? Supply of goods and services would be the taxable event. So, whenever a goods or services are supplied by the manufacturer or the retailer or the service provider, the taxable event would be there and GST would be levied. And rules for determining the place and time of supply of goods and services has been proposed in the model law. Now, once we say that supply is the trigger point for the levy of GST, the another important question which would come to our mind is, if tax has to be levied on supply, then what is the point of supply? What is the place of supply? Where I am rendering the service? Because the place of supply is important, because when the GST has to be levied, place where you have supplied the goods becomes important, and the time of supply is also important. So, these we have a separate session on the supply of services, wherein we will be discussing in detail, but what at this point of time is important is the taxable event is supply, and place and time of supply are important. Today there are a lot of rules which govern these provisions, but in the model GST law most of these provisions have been included in the law itself, and today as of today in the model law the valuation rules are there in one of the annexures, and most of the provisions in relation to place of supply, time of supply, input tax credit have been included in the law itself. Then both central GST and state GST would be levied on intra-state supply of goods and services. So, if there is a transaction of supply of goods or services within the state, that is the intra-state, then CGST and SGST would be levied. When a transaction of supply of goods or services takes place between two states, from A state to B state or B state to C state, or if there is a transaction between two states, then it is a case of interstate supply of goods and services, and in such a case instead of CGST and IGST, what would be levied would be IGST, that is aggregate of central GST and the state GST, known as integrated GST. Then another important features of GST, exports will be zero rated. So, there will be no effective tax on the export of goods or services, and if taxes have been paid on the inputs or input services, then there will be a refund allowed to those exporters. Then in case of cross border transactions which are imports, exports are zero rated. In case of imports, a tax will be levied which will be called IGST. So, IGST is levied on interstate transactions of supply of goods and services as well as import of goods and services. So, for the first time on import of goods and services, we will be having a tax IGST which will be levied, but basic customs duty will continue. So, in case of customs duty, what is happening is basic customs has been retained under the Customs Act, but it would be levied as a separate union tax as done presently, but the additional customs duty, the special customs duties, all those duties would get merged or subsumed in the GST itself. So what effectively would happen? We will have in the GST regime, we will have multiple statutes. Why multiple statutes? Because we have a GST structure which comprises of 3 types of taxes. So, we will have one GST law for the center, that is the CGST Act. It will be legislated by the union government, approved by the parliament. Then we will have IGST Act, that is the integrated GST Act, which would be levied, which would be legislated again by the union and collected by the union. And then we will have state GST Acts. We have 31 states in the country, so we have 31 state GST Acts, like Maharashtra State GST Act, Tamil Nadu State GST Act. Likewise, we will have 31 state GST Acts. So, effectively we will be having 34 GST Acts in the country. Then, in case of intra-state supply, dual GST would be applicable. So, CGST would be applicable, SGST would be applicable, and it would be charged by both the states. It is expected that the division of the bifurcation of the tax would also be equal. And then we have interstate for interstate supplies, interstate or integrated GST would be there, which is likely to have a total of CGST and SGST. The sum total of both the taxes would be the tax which would be levied as IGST. In case of additional tax which was proposed earlier, this has been withdrawn when the parliament approved the constitutional amendment provisions recently. Then imports will be deemed to be supplied in the course of interstate trade of commerce, and IGST would be applicable on such import of transactions also. Now, why do we need GST? We have discussed what are the issues in the present taxation system. Why India needs GST? Because we have lot of issues, lot of challenges, lot of control, lot of shortcomings in the present tax system. India has been thinking of having a GST for last decade or so, 2009 to be precise. GST would give us ease of doing business. When you deal with multiple taxes, your energies are occupied, your transaction costs are high, are more when you comply with most of the laws. So, what is going to happen if you are made to comply with one law? Then of course, the ease of doing business is there. There is no need of dealing with various regulators and departments. It would make exports competitive. Today, exports are not competitive because either the Indian goods or services suffer a tax on the inputs or input services, which is not refunded, and if the amount is if the tax is not refunded, then you end up having a higher cost of goods. So, your exports become competitive. Since IGST would be levied on the import of services, your domestic industry is also protected. And today, no free interstate trade and commerce is there. It is a research study done wherein it has been revealed that on an average, Indian transport vehicle has to spend around 6 hours on the road by waiting, which is the waiting time at various checkposts. So, with free interstate trade and commerce, what will happen? There will be no trade barriers, there will be no physical barriers, and goods and services would be freely moving from one state to other state or from one part of the country to other part of the country. So, we will have a scenario of free trade and commerce. Then today, our present tax suffers from various discriminatory taxes. We have undue preferences, we have trade and non-trade barriers, we have anti-tax, we have octroi, we have check posts. All these things are likely to be over when we move to the GST regime. Then another important issue in the present system is we have multiple rates of taxes and multiple taxes. So, what are the multiple taxes we discussed, and when we see that what are the taxes which are getting subsumed in the GST, we will come to know that today we live in an era where where taxes are levied multiple. We have multiple taxes. We pay around 20-25 taxes, small taxes, big taxes to the government, to the state government or to the union government or to the local bodies. And then apart from multiple taxes, the rates of taxes are also multiple. unlike service tax where we have only one rate, that is 14%, in other taxes there is the rate of tax also varies from 0 or nil percent to 28, 29, 30%. So, that is the range of rates we have in our country on various goods and services, and because of that the classification also becomes a problem. And then as a developing country, we need to be to be transparent in our tax policy and tax structure, and if the economy is to grow, we have to look at a progressive tax policy which is addressed by the GST. Then there is a philosophy that fewer and lower taxes will yield more revenue rather than having stiff taxes. Today we are living with stiff taxes. Tomorrow when GST comes, we will have fewer taxes, we will have less number of slabs, and we will have a tax base which is huge. So, collecting taxes from a larger base with a lower rate is ultimately going to end up in higher revenues. Then the tax base will be broadened, then GST will operate on a negative list like service tax. All goods and services would be subject to GST unless they are specifically exempted. Today there are around 300 exemptions in excise and there are around 75 exemptions in service tax. There are around 298 exemptions in VAT. So, with GST coming in, it is expected that all the number of exemptions is going to come down to less than 100. Then transaction cost is in the hands of taxpayers is very high, that will also get reduced. Then improvement in international cost competitiveness because of the cheaper exports, the Indian exports would also improve. Then it will also add in enhancement in efficiency in manufacture and distribution due to economies of scale. One of the big advantages of GST is that it is going to change the way the business is done by the businessmen or by the manufacturers. It will positively impact the supply chain, and because of the supply chain, the distribution and marketing costs are also going to be positively impacted.
Sir, I wanted to ask, how would it affect the Make in India project of Mr. Modi?
See, what would happen is today what is happening is the taxes on goods are fragmented. You pay many taxes on the goods. So, when in case of manufacture, what would happen is when GST comes in, instead of paying so many taxes, we pay one tax, that is the GST. That is one major thing. Two, the cost of production is going to be lower because of the one tax, and because of the fact that the manufacturer will not pay tax on goods. So, with there being tax only on the net value added, the cost of production is going to be less. Then there will be lot of efficiencies in terms of operations, in terms of marketing, in terms of distribution. So, the manufacturing is one sector which is going to get a boost in the GST regime, and with that happening, the Make in India project is also likely to be successful. Now, we come to the cascading effect. What is cascading effect? We all know that today multiple taxes are there, and on the top of it there is no inter-tax set-off, and even within the tax, even within one tax, there is no set-off for certain taxes which are paid. So, effectively what happens is we pay tax on tax. So, when you pay tax on inputs and then you carry out certain production processes, and then when you supply those goods out of your factory, that is the finished goods, you pay taxes, you have paid so many taxes on the inputs. So, again on the manufacturer, when you are paying the taxes, you do not get the benefit of the taxes which the goods have already suffered as raw material or inputs. So, we end up paying tax on taxes. So, in GST what would happen is this issue would get addressed, and this is one of the major benefits of GST, that there will be no cascading effect. So, when we pay tax on taxes, what happens is the cost of products or the cost of services goes up because you do not get the set off, and then there is a higher cost of compliance, because when you comply with various laws, your compliance cost goes up. So, in GST what would happen, many taxes will get subsumed, and tax cascading will be eliminated on credit of inward or input taxes. So, when GST comes in, since most of the taxes are getting subsumed, so only one tax has to be, only for one tax you will get a set off, and since all the small taxes and other taxes get subsumed in one tax, so instead of, so for example, there are 18 taxes which are getting subsumed in GST. So instead of taking instead of getting input credit of 18 taxes, you can get you are getting credit of GST, which takes care of the cascading effect of all the other taxes which is presently not available. Now, for example, in central sales tax, we are paying on interstate sales, we pay a central sales tax today, which is collected by the origin state, for which no credit is allowed by any level of government. So in GST this will be phased out. So when we pay CST, we don't get credit either in the CST itself or in the VAT or in the excise duty. Then there are certain real estate transactions which are kept out of the scope of VAT and SENVIT. So for most of the real estate transactions, we don't get the benefit of SENVIT credit. Whatever taxes are paid on the inputs or input services, the service tax tax gets subsumed as a cost, and it is a cost to the company. Then there are certain exempt sectors today in the economy. What happens is, when you have exemptions, they distort the supply chain, and since they distort the supply chain, they don't get the credit, and when they don't get the credit, the cost of production or the cost of rendering service goes up. So these exempt sectors are going to be minimum in the GST regime, and with that the cascading effect will also get reduced. So this is one example of, you find that on a restaurant bill we are paying VAT also, we are paying service tax also, and we are paying VAT on the amount of service tax also. Now let us come to the objectives of GST. These objectives were highlighted in the first discussion paper which was released by the GST committee in 2009. That was the first discussion paper which kicked off the discussions of GST in the country after it was announced by the finance minister in that point of time. The objectives of the 5 major objectives of GST is the removal of cascading effect of taxes. So there is no tax on tax, there is free movement of goods and services, there will be no trade barriers, there will be no entry check posts. Because most of the indirect taxes will get subsumed, it will rationalize the tax structure so far as indirect taxes is concerned. So when GST comes, what will happen, friends? We have one major direct tax, that is income tax, and we have one major indirect tax, that is GST. Then continuous chain of set off will be available to the manufacturer till the consumer state, till it consumes, and there will be wider coverage of input tax and service tax in the set off. So these are the major objectives of GST. Now look at this slide. This gives us a bird's eye view. This gives us a bird's eye view on the one nation, one market concept, and what is going to be the advantages of GST in times to come. Let us look at one by one. Low compliance cost. We have discussed this. There is going to be one common market. It will bring down logistics and inventory costs, because when the goods are freely available and freely subject to movement from one part of the country to other part of the country, the logistics costs will come down. The inventory holding cost in terms of warehouses and godowns will also come down. It will give boost to e-commerce. It will replace multiple taxes, and since it will boost the economy, it will also end up bringing in lot of new investment opportunities. Manufactured goods will become cheaper, growth of GDP will be there, growth of economy would be there, fiscal deficit will get reduced, and tax GDP ratio is going to be high. All these things will happen in GST. Then since GST is a consumption based, destination based tax, another major benefit of GST is lifting up less developed states. So what happens is, when a consumption takes place, the GST gets collected. So what effectively happens? We will now have two types of states. One is producing states and second is consuming states. So producing states are also consuming states, so they will in any case get benefited. But for the states like, for example, UP, Bihar, Rajasthan, MP, where the consumption is more than the production, so since these states are the consuming states, the GST, they will have more revenue in terms of GST. So let us now come to the advantage. We will continue with the objectives and advantages of GST. We will have a common market and common tax. So we have a unified common national market in India, which will give a boost to the foreign investment and Make in India campaign. So Make in India campaign also gets a boost from the from the introduction of GST in the country. Then we will have a very simple tax structure. The law which is going to be there will be only one law which will be required to be complied by the taxpayers, and hopefully it should be a simple tax law and tax structure. Since we will have a simpler tax regime, very few exemptions, interpretational issues will not be there. There won't be much of the dispute between the tax collector and the taxpayer, and the assessees or the taxpayers will have a very simplified tax structure. It will streamline and consolidate the indirect tax regime. So, instead of having so many indirect taxes, small and big cesses, we will have only one GST. Uniformity of tax rates. In GST, what is going to happen? We will have a minimum number of rates of taxes. It could be 2, 3, 4, not more, not much as we have in the present case. And since that rate has to be applied to goods and all goods and services barring the exemptions, the uniformity of tax rates will also be in the interest of the economy, interest of the tax revenue, interest of the taxpayers. Then another important thing about the GST would be that it will have a simplified and automated procedures for various processes such as returns, registration, payment, refunds, etc. So, what is in GST? Information technology is going to be the backbone. The key to success of GST would be the IT infrastructure which will be there, for which they have already formed a company called GSTN, GST network, which will take care of all the front end and back end processes under the GST. So, far as front end processes are concerned, they would be basically in relation to registration, returns, refunds and tax payments. All these things are going to be online with virtually no physical interface between the taxpayer and the tax collector. So, far as back end processes are concerned, appeals, assessments, scrutinies, audits, all these will be covered under the back end processes for which the preparations are already on. Then we have no interstate barriers, the borderless market. Since everything will be automated, the compliances would also be very easy, and it will be very easy to check whether a compliance has been done or not, and you will have sufficient time to rectify the mistake which you have done. Compliance cost will get reduced, no need of having multiple records, no need of reporting to multiple tax authorities. Most of the record, that is the electronic ledger of the taxpayer, will be maintained in the GST network system itself. Returns will be filed online, and the compliance cost is going to be substantially reduced. As we discussed, there is not going to be no tax cascading across the chain. With every value addition, the tax will be only the incremental tax will have to be paid, and since everything is automated, the transaction recording is automated, the transaction capturing is automated, the tax collection is automated, the sandwich credit is also going to be automated. So, it will be a automatic seamless flow of input tax credit month by month provided to the assessee. It will result in lot of operational and functional efficiencies. Average tax burden on supplies of goods and services is likely to come down, which will lead to more consumption. So, effectively what would happen, since the cost of production is less, there is no tax on tax, the final price or final cost to the final cost which is charged to the consumer, whether it is a goods or service, is likely to be lower than what the consumer is asked to pay today. If assuming that the profit margins remain reasonable or constant, the cost to the buyer is going to be reduced. Then, since most of the things are going to be automated, the transparency would lead to a situation where corruption is also reduced substantially. We will have a miracle cure for corruption. So, when we move to GST, then human interface, as we discussed, will not be there. It will improve the competitiveness of the businessmen for ease of doing business and reduce transaction and compliance costs. When the Make in India, it will also facilitate the project like Make in India. The economic activity will get a boost, and because of the higher production, higher manufacturing, more economic activities, it is also expected that when the GST comes, we will have a situation where the employment opportunities also increase. Employment opportunities are likely to increase for the professional services also, which we will discuss a bit later. Then benefits of exemptions and compounding schemes will be available to a large segment of small retailers, which will make their products cheaper and cheaper for the consumer. So, it is not that GST is going to increase the tax burden on the ultimate tax burden. we will have a scheme of composition and threshold exemptions, which will benefit the small businessmen and taxpayers or traders, and because of the compounding scheme, and the benefits of exemptions, the consumer will also benefit. Now, let us look at this illustration. This is how the value addition will be taxed so far as GST is concerned. In the first row, you have a manufacturer who has purchased inputs worth ₹100. He does, while manufacturing the goods, he does a value addition of say 30 rupees, and his value at which he supplies is 130 rupees. Let us assume a GST rate of 10%. So what happens is, when he supplies the goods of 130, he pays 13 rupees as GST, and since 100 rupees is his input cost, he has already suffered 10 rupees as GST on the inputs. So effectively, instead of paying 13 rupees to the exchequer, since he has already paid 10 rupees, the net amount of tax GST which he will be paid at this point of value addition is only 33 rupees, 13 minus 10. So far as government is concerned, government has received 13 rupees, 10 at the point of origin and 3 at the time of value addition. When these goods move from manufacturer to wholesaler, the input cost of tax is 13 rupees. He does a value addition of 20 rupees, say for example in terms of packaging or delivery or whatever, and his output value is 150 rupees. On 150 rupees, again he pays a tax of 10% that is 15 rupees. Since he has already paid a tax of 13 rupees as input tax, he will only be required to pay an incremental tax of 2 rupees. So again 13 plus 2 makes it 15. So government does not lose anything, government gets 15 rupees as tax. When it moves to a next stage of retailer does a value addition of 10 rupees and his cost for the consumer is 160 rupees. So the tax required at the rate of 10% would be 16 rupees. So 15 rupees has already been suffered. So in this case, 16 minus 15 is 1 rupee. So 1 rupee is the incremental tax he would be paying as GST. So if you look at this table, friends, you will find that the last column will tell you 3 plus 2 plus 1, that is 6 rupees. So 6 rupees GST has been paid at 3 different levels of manufacturer, wholesaler and retailer. 10 rupees has already paid by the manufacturer when the inputs were there. So effectively 16 rupees should be taxed on 160 rupees and 16 rupees has been collected by the government, but at the different stages of the value chain. This is how GST will be working. Now, when the GST in our country, GST is being levied because GST is being levied only after the constitutional amendment. Today in the Constitution of India, there is no provision to collect GST. That GST cannot be levied unless you have the taxation powers in the Constitution. The recent constitutional amendment bill, that is 122nd constitutional amendment bill, which was passed by the Rajya Sabha on 3rd of August and again by the Lok Sabha on 8th of August, and which now stands ratified by 17 state legislatures. This amendment bill made certain enabling provisions for the union government and for the state governments to levy GST in the country. So let us discuss some of these provisions. This constitutional amendment bill basically enables the introduction of GST in the country, and which will be levied by the central government and by the state government. It defines what is GST, it defines goods and services, which are also there. These definitions are also there in the model GST law. Then it also provides for integrated GST to be levied on interstate transactions. It talks of imports of goods and services, and imports are deemed to be interstate transactions. It provides that alcohol for human consumption will continue to be taxed as excise duty, and it is not part of the GST kitty. So so far as alcohol is concerned, the taxation on alcohol will be governed by the present laws, that is the state excise laws, and alcohol is a state subject. So union can't levy a tax on the manufacture of alcohol, it will be levied by the state governments only. Then so far as petroleum products is concerned, though petroleum products are part of the goods, part of the scope of the definition of goods, the provision says that so far as levy of GST in petroleum products is concerned, it will be deferred for the initial period of 2 years, and then GST Council would take a call whether it should be subjected to GST after reviewing it after a gap of 2 years. So, whereas tobacco is concerned, tobacco will be part of the GST kitty. Then in the entire GST, what is important is monitoring the administering the act of the tax of GST. For that, it has been provided in the constitution itself that there will be a council called GST Council, which will administer the levy and monitor the levy of tax GST in the country. So, the scope, how the GST Council will be constituted, what will be its functions, have been provided in the constitution itself. And then it also provides for the compensation to the states for possible loss from the introduction of levy. So, the central government, the union government will be assuring all the state governments that no GST, that no state should be there which suffers a loss because of the introduction of GST. So, their existing tax revenue gets protected. Now, there is article 279A in the constitutional amendment, which says that once the constitutional amendment bill becomes the constitutional amendment act, which will happen after the president's assent, after ratification from the 50% of the states, that is 16. So, it has already been done. Then after the bill becomes an act, within 60 days the President of India has to constitute a council called GST Council. It will comprise of Union Finance Minister, Union Minister of State for Finance, who will be in charge of the revenue. It would consist of all the state finance, all the finance ministers of the states, or a person nominated by the state government. The quorum for the GST Council would be 50% of the total members, and decisions would be taken by majority of the 75% of the weighted votes of the members, and 1/3 weight would be for the center and 2/3 weight for the states. So, the quorum is tough. The asking majority for getting the decisions in the council is also very tough. So, it is expected that that the GST Council is going to decide the issues before the council in all seriousness and in the larger interest of the country as a whole. What would the GST Council do? GST Council would make recommendations. It will not decide, because the deciding authority is the parliament or the state legislatives. So, based on the recommendations of the GST Council, the respective state assemblies or the parliament of the country would be enacting or would be making the statutory provisions for the GST. Those recommendations would be in relation to taxes to be subsumed in GST, exemptions under the GST regime and the thresholds for exemptions or composition, what would be the rates of GST, the band within which the GST rates would be flexible, what would be the provisions of model GST law and the procedures. The model GST law, which is in public domain now, again has been drafted on the recommendations and is on the recommendations of the GST Council only. Date from which GST would be levied on petroleum products, because in the initial 2 years it has been deferred. Any changes which would be required in list 1 or list 2, that is the taxes, the items or subjects on which tax could be levied by the central government or by the state governments. Any change in that will also be based on the recommendation of the council. Compensation for loss of revenue to states for 5 years. How this compensation will be decided, how this loss will be arrived at, how it will be determined, and what should be the formula for compensation of loss will also be recommended by the GST Council. This council has also been authorized to determine the procedure in performance of functions. So, how the GST Council will function will also be decided amongst themselves by the council members. Then there could be situations where there is a dispute between the center and the state, or center and some of the states and the other states, or between or amongst 2 or more states. So, all those disputes would also be decided, would also be resolved by the GST Council, for which they will work out the modalities. Now, in the constitution we have 3 definitions. GST has been defined to mean any tax on supply of goods or services or both, except taxes on the supply of alcoholic liquor for human consumption. Alcoholic liquor for human consumption has been excluded, friends, because it is in the state list, and only states can levy a tax on alcoholic liquor which is meant for human consumption, that is the potable liquor. Now, important thing here to note is that GST is a tax on supply. So, we will have to come out of the present mind frame of sale or provision of service or manufacture of excisable goods. So, no longer there will be a concept of excisable goods. So, supply becomes important, supply becomes paramount, and supply is the key to levy a tax called GST. Then goods would include all materials, commodities and articles. This is again a very wide definition, and out of this wider definition a smaller definition has been carved out in the model GST law, which we discussed a couple of minutes back. And then services means anything other than goods. So, what is goods is important for us, and whatever item or subject which is not good, then it is a service. And then what is supply? Now, we need not know what is sale, we did not know what is manufacture, we did not know what is rendering of service. All of us have to focus now on what is supply. Supply is not defined in the constitution, but supply has been defined in the model law, and section 3 of the model law says what supply is. Supply is, again they have not defined what a supply is, they have defined what supply would include. So, we have an inclusive definition rather than a comprehensive definition. Supply would include all forms of supply of goods and services. It would include sale, transfer, barter, exchange, license, rental, lease, disposal. So, all forms of supply are covered here. Then import of services is also covered, and then we have one schedule 1 which provides for certain services which will be deemed to be supply even though they are supply without a consideration. So, in certain cases a supply without consideration is also considered as a supply for the purposes of levy of GST. And then there is a schedule 2 which says that certain supplies would be deemed to be a supply for the purposes of GST, and they will be included in the scope of supply. They pertain to, for example, renting of, like whatever today we have as declared services, most of those are covered as part of the supply. Like for example, works contract will now be considered as supply of service rather than supply of goods and services both. Then a third category of supply is any supply between principal and agent. So, if the goods are supplied by manufacturer to a distributor or to a consignment agent, that will also be covered as part of the supply. Now, what is important for supply? Supply should be for goods and services, it should be made or agreed to be made. So, even if we enter into an agreement for supply of goods and services, it will be covered. It should be for a consideration, but for certain activities, goods or services supplied without consideration would also be considered as supply. And it should be made by a person, it should be made to another person, it should be in relation, but it should be in the course of or furtherance of business. So, furtherance of business or in the course of business is an important condition here. And supply will include imports irrespective of whether for consideration or not, and whether in the course of or furtherance of business or not. So, even if you import any goods or services which is not meant for the business purposes, even then it would be subjected to GST. Now, what could be those services which are without consideration, but yet considered in the scope of taxable supply? Permanent transfer or disposal of business assets, temporary application of business assets to a private or non-business use, services put to a private or non-business use, self supply of goods or services, that is inter-depot supply, inter-branch supply, supply within the organization, those would also be considered. Then assets retained after deregistration and supply of goods and services by a taxable person to another taxable or non-taxable person in the course of furtherance of supply. The last bullet is very important and enlarges the scope of supply very widely. Then services put to private or non-business use is also a supply, taxable supply. Now, when the bill got approved by the Rajya Sabha and Lok Sabha, these are the major changes which were made, and only after these changes the constitutional amendment bill was passed by the Rajya Sabha. One is compensation to the states for any revenue loss for 5 years on account of introduction of GST. The earlier was the word may, now the word may has been replaced by shall, and now it is obligatory and mandatory on the part of union government to compensate all the states for any likely or possible loss in the event they suffer because of the introduction of GST in that state. 1% additional tax which was earlier proposed for the manufacturing states like Karnataka, Tamil Nadu, Gujarat, Maharashtra, it was withdrawn. then dispute resolution forum to adjudicate disputes between, a dispute resolution forum would be there on the recommendation of the regional of the council to decide on to adjudicate the dispute between the center and the states, 2 or more states, or between center plus some states and the other states. So, there could be a combination of any of these 2 parties, and then taxes collected by the union will be distributed between the union and the state, like IGST will be collected by the union, but it will be distributed between the 2. This gives you the or if you look at the orange portion in the map, these are the states where the GST bill, constitutional amendment bill has been ratified. Now, we come to a very important part of the overview. When we have GST in the country, what taxes will get subsumed? So, as a taxpayer, we should know that when GST comes, these are the taxes which I will not be required to pay, and I will pay only one tax, that is the GST in respect of in place of all these taxes. Central excise duty. So far as union taxes are concerned, central excise duty, various additional excise duties, additional duties of customs, we call it CVD, then special additional duty of customs, we call it ADC. So, customs duties other than the basic customs duty, service tax, various surcharges and cesses, and central sales tax CST. All these union taxes will merge, will get subsumed into GST. So far as state taxes are concerned, value added tax, purchase tax, entertainment tax, luxury tax, lottery tax, state cesses and surcharges, entry tax and octroi. All these taxes will get subsumed in the GST. So, in place of all these 14-15 taxes, we will have only one tax, that will be GST. Then petroleum products and electricity will be outside the GST net initially. Then another important thing about the subsuming of taxes is local body taxes will not subsume. These are the taxes which are levied by union government on one end and central and state governments on the other end. So, apart from the state government, there are certain taxes and levies which are charged to the taxpayer by local bodies. For example, in the states like Karnataka and Maharashtra, local bodies are very strong, and they are as an important leg of the governance machinery. They also collect taxes, and those and particularly in these 2 or 3 states, the amount of tax revenue from entry tax or octroi or certain other small taxes is huge. So, what is getting subsumed is the taxes levied by the state governments, not the taxes levied by the local bodies. So, a tax like entry tax which is levied in Maharashtra by local bodies or entertainment tax may not get subsumed in the GST, but this taxation is still open, and the state governments will have to take a call whether to get these taxes subsumed and compensate these local bodies, because these local bodies also require funds for the developmental activities. So, whether they will continue to levy those taxes, or these taxes get subsumed in the state through the state GST in the GST, and then those state governments, since they will be having a higher revenue, will also compensate these local bodies, is a call yet to be taken by the GST council and by the respective governments of those states. But this makes one thing clear, that if in future, after the implementation, after the introduction of the GST, if any local tax is levied by a local body, then that local body is free to levy any other new tax or any other tax by whatever name called, and those taxes will not get subsumed in the GST. Now, let us look at the taxes which will not be subsumed in the GST. That means, we will have to live with these taxes so far as GST is concerned. When GST comes, we will have to pay GST plus we will continue to pay these taxes. These are, so far as central government is concerned, basic customs duty, excise duty on tobacco products, export duty, specified cesses like oil cess, taxes on petroleum products, stamp duties. So, because stamp duty is not getting subsumed either at the state level or at the central level, it will be outside the GST network. Then taxes on liquor, toll taxes, road taxes, environment tax, property tax, tax on consumption or sale of electricity, purchase tax on food grains, taxes on motor speed and high speed diesel. All these taxes are not getting subsumed with the GST, and these taxes will continue to be levied by the state government or central government. Now, if you look at this, friends, while we are moving on GST from central excise and VAT, because of the petroleum products and tobacco products, we will continue to have these acts, that is the Central Excise Act and VAT Act of the respective states, is still live. So, they will not be repealed, because the VAT will continue to be levied on these products, and central excise duty will also continue to be levied on these products. So, we will still have to live with these two existing tax laws, other than apart from the new GST law. Now, let us look at some of the new concepts in the GST regime. The indirect tax structure will be threefold now. We will have intra-state taxable supply, we will have interstate taxable supply, and we will have import. So, what will happen is, for intra-state taxable supplies, excise duty and service tax will be known as CGST, local VAT and other taxes will be known as SGST. So, you will have part of the taxes we pay as CGST, part of the taxes we pay as SGST. What would be the composition of these two taxes? Council will decide. It is expected that it will be equal. So, for example, the tax rate, GST rate is 20%. So, 10% would be a GST, SGST, and 10% would be CGST. Then for interstate taxable supply, CST will be replaced by IGST, and in all probability is likely to be a sum total of CGST and SGST. So, far as imports from outside India is concerned, import would be today they are subject to customs duty. In place of this, it will be CVD. In place of CVD and SAD, we will have IGST, which will be charged. Central CGST will be on both goods and services. It will be levied, controlled, and administered by union. Only union government can levy CGST. It will be levied through a separate statute on all the transactions of goods and services made for a consideration and without a consideration. It will be levied across the value chain, and the rate of CGST would be prescribed appropriately after considering all the factors, the revenue considerations and the acceptability, and both the governments will combine their various levies into a single GST. The proceeds of taxes would be shared between the two states. So, whereas SGST is concerned, again like CGST, it will be levied. It can be levied only by the state through a statute of SGST on all the transactions of goods and services. It would be paid to the account of the respective state government. Like in case of central government, it goes to the Consolidated Fund of India. In case of the state government, it goes to the Consolidated Fund of the respective state. There would be exemptions in both the cases for CGST also as well as SGST for the goods and services which are placed outside the GST or which are below the threshold limits. Then in both the laws for CGST and SGST, the charging section, the taxable event, the measure of tax, the valuation of tax, the classification, the place of supply, time of supply, all those things would be there. Those provisions would be there in the statutes, and it is expected that most of these in all probability all the provisions are going to be harmonious and integrated. You can't have a different SGST law in a state, and you can't have various provisions which are different from the other states in any other state law. Then IGST is a new concept, wherein all interstate supplies of goods and services would be subjected to IGST. So, effectively what happens is CST gets replaced by IGST. So, today CST is applicable in case of interstate sale of goods. Now, IGST would be applicable on, would be levied on interstate supply of goods and services. So, all cross border transactions, domestic as well as international, gets covered here, except the exports. So, imports will be subject to IGST. It will be shared between the center and the states. There will be a single IGST rate, unlike the GST rate, which would be divided, which would be split into CGST and SGST. IGST would be levied on all interstate transactions with appropriate provision for consignment of stock or stock transfer of goods and services. So, in IGST what is going to happen is, unlike what is practiced today, IGST will also be applicable as per the model law on the supply of goods or services within the by one arm of the organization to the other arm of the organization. So, inter office, inter unit or inter company supplies of goods and services will also be subject to GST, of course, with the benefit of the input credit. Then interstate dealer will pay IGST only after adjusting available input IGST, CGST and SGST on purchases. So, all these three taxes, barring one situation which I will discuss, the seamless input tax credit would be available. Now, let us look at one example. Supposing there is a seller in Maharashtra who sells goods to Rajasthan, to a buyer in Rajasthan for say 1 lakh rupees, and let us assume that rate of IGST is, since the transaction is between two states, IGST will be applicable. As let us assume a rate of IGST for the purposes of this example as at 8%. So, what friends happens is, on a transaction of 1 lakh rupees, IGST payable is 8,000 rupees. So, this 8,000 can be paid after taking input credit if it is available. For example, in this case there is a credit of IGST 3,000 rupees, there is a credit of CGST 1,500 rupees, there is a credit of SGST 1,500 rupees. So, in what manner this tax could be paid? If one has to pay 8,000 rupees as IGST, 3,000 plus 1,500 plus 1,500 makes it 6,000. So, 6,000 could be adjusted as input tax credit available, and remaining 2,000 could be paid in cash. Now, since in this case the dealer has used SGST of Maharashtra to the extent of 1,500, in this case what is happening is he was having a credit of 1,500 of Maharashtra GST. So, since he is using that, so and everything is accounted for by the center in the case of IGST, center will transfer 1,500 rupees to the Maharashtra government. It will all be done electronically. Then when the goods come to the Rajasthan and the Rajasthan buyer sells it for 2,000 rupees. So, assuming the same rate of IGST at 8%, on 2 lakh rupees of transaction 16,000 would be the SGST. If the entire IGST of 8,000 is used to pay SGST, then the Rajasthan government, since IGST has been utilized in Rajasthan government will transfer 8,000 rupees to the center. So, effectively this will how IGST will operate, and it will be all through electronic ledgers, and it will be done through the GSTN network, and no manual interface is required in this. Now, when we pay taxes like IGST, CGST and SGST, the input credit would be available, but input credit would be available in a particular fashion. It will be a seamless flow of input tax credit, but it has to be in a proper order. So, what is that order? In case of CGST, the CGST has to be first taken credit of, then IGST. SGST cannot be set off through CGST. Similarly, in case of state GST, you first set off state GST, then integrated GST, and you cannot set off any central CGST out of this. In case of integrated tax GST, you have to first IGST could be first set off from IGST, then CGST, and then if anything is left in SGST. So, this order has to be IGST, CGST and SGST, and this order cannot be changed by the taxpayer. Now, the same input credit has been explained in this matrix, wherein the cross set off of input taxes between CGST and SGST is not allowed, where we have mentioned NA, that is not applicable. In case of CGST, like 1 and 2 is the ranking, we can't change the ranking, it has to be set off in this fashion only. Then when we let us come to the GST network. When GST is levied, the entire GST is going to be administered and monitored and implemented by a IT platform which will be known as GST network. GST network is a special purpose vehicle. There is a company called GSTN has already been incorporated by Government of India as a special purpose vehicle, company registered under the Companies Act, and it is responsible for setting up of IT backbone for the GST. It has already been incorporated, already started functioning, and various processes are already being worked out, and the software and hardware is being procured, developed, and being tested and will be tested in next couple of months. In this company 24.45% is held by the Government of India. State governments all put together hold another 24.5%, and the remaining 51% is held by various non-governmental institutions, including institutions like LIC of India and National Stock Exchange and other institutions. Then the objectives of GSTN are integration of the common GST portal with the existing tax administration system of the central and state governments and other stakeholders. So, it will integrate all the IT platform of all the states and union territories and the central government. It will provide a common PAN based registration, it would enable e-filing of returns, it will also have a networking with all the banking system in the country, and e-banking, e-payment process will be processed through the network only. Facilitation, implementation and setting standards for providing services to taxpayers through a common portal of state governments and other stakeholders will also be done by this. It will build a workable interface between the taxpayers and facilitate the tax compliance. It will also carry out research, study the practices and provide training to the stakeholders. So, government is also banking upon this network to provide a large scale countrywide training and awareness to all about GST to all the stakeholders. Now, the $1,000,000 question is, what is going to be the rate of GST? That is going to be the $1,000,000 question. What is going to be the rate of GST? Now, Government of India formed a committee under the chairmanship of Chief Economic Advisor of the government, and everybody is talking about a RNR. Now, what is this RNR? RNR, by RNR we mean a revenue neutral rate. And what is this revenue neutral rate? Revenue neutral rate is that rate, that single rate which will protect or preserve the revenue at the desired current level. So, whatever the central government and state governments are collecting today as a tax revenue, if that revenue was to be collected, is to be collected in the GST regime, what would be that rate, given the fact that the tax base is going to explode like anything, manifold. So, what is that rate which would fetch the same amount of tax revenue which is being collected today? That is the revenue neutral rate. That rate which brings in the revenue neutrality so far as collection of taxes is concerned. Like in costing, we have a break even point. RNR is the break even point for the amount of tax to be collected under the GST regime. It is the given rate that gets converted into whole rate structure. So, this committee has recommended a range for the purposes of RNR rather than providing a specific rate. It has recommended a rate of 15 to 15.5%, which is the combined rate for central and state, and talks of two rates. One is lower rate for certain essential commodities and foodstuff, two is a standard rate between 17 and 18%. But since the revenue is also paramount, the state governments are looking at a revenue rate which is slightly higher than this, and but once the union government has assured all the state governments to compensate for the losses, for the revenue losses, we do not think that this issue should be there, and revenue neutral rate should be kept at should be pegged at a very reasonable level. This is the rates which have been recommended by the RNR committee. So far as demerit products are concerned, for example tobacco, on that they have recommended a rate of 40%, that is we call it sin rate, and the preferred rate could be around 12%, 6% also on various items. Now, over a period, over last couple of years, there are many agencies which have been talking on the rate of GST. The main opposition party in chambers have suggested a rate of 18%. National Institute of Public Finance and Policy recommended a rate of 27%, which was nothing but a summation of two major taxes, that is the VAT and the excise duty rate in the country, mean excise duty and the VAT rate in the country. So, 14 and 12.5 and 15, 16 makes it 27. The industry is now talking of a rate of 16 to 18%, and we have the rate suggested by the GST rate committee of 17%. But what is going to be the actual rate? Will it be 18? In any case, in all probability, it is not going to be less than 18, because in the parliament during the discussions of passing of the bill, constitutional bill also, they were talking of 18. Congress was advocating for a cap of 18%. So, it could be somewhere in between 16 to 20%, but what would be the exact rate will be decided by the would be recommended by the GST council only. Now, if you look at the GST as a tax across the globe, we have over 160 countries where GST has been implemented. There are 40 different models of GST which are practiced in different countries. We have countries like Singapore and New Zealand where everything is taxed at a single rate. Indonesia, there are 5 rates, there are 0 rate and over 30 categories of exemptions. In China, GST applies only to goods and the provisions for repair, replacement and processing services. So, and this GST is levied as a business tax in the form of VAT, either VAT or a GST. Now, let us look at what what is the different rate of GST which is levied across the globe in some of the important countries. We have Canada at 5%, we have France at different rates ranging from 2.1% to 20%, Germany is 19%, UK is 20%, the reduced rate is 5%. So, these are some of the other rates. Malaysia was the last country to enter into the GST regime in April 2015 last year, and the present rate of taxation of GST in Malaysia is 6%. India would be a rate based on the RNR, which is yet to be decided. We may have GST from April 2017 onwards. Hungary is a country where the GST is taxed, GST rate is the highest, 27%. A small country like Aruba has a GST of 1.5%. The average of Asia Pacific countries or nations is 9.88%. European Union has a GST rate of 19.4%, and the world average of GST is 16.4%. So, if GST comes is levied at a rate of around 18% or so, it would be somewhere around the rate which we are talking of in India, that is 18% or so. Now, what are the important things you should know in the GST? One is GST is applicable on supplies. No sales, no turnover, sale, no manufacture, no trading or rendering of service. It will be applicable on supply, and GST would be payable as per the time of supply. At what point of time supply is made, that will be more important. For example, goods. So, in case of goods which are delivered, the time of supply would be the time when the movement of goods is terminated and goods are delivered to the buyer. In case of supply of services, when the recipient receives the supply, the rendition of supply service is completed, then the supply is over. Then determining the place of supply is again another important issue in GST. Place of supply would be important and relevant in case of IGST, because in case of intrastate GST where CGST and SGST would be levied, place of supply is not relevant. But in case of interstate supply, it will be relevant, because it will be covered for the purposes of IGST only when the place of supply is a different state. So, there the place of supply becomes important, and the supplier of the goods or services has to be in a state, and the recipient of the goods or services has to be in a different state. So, if both are in the same state, it would be a case of intrastate supply, and CGST and SGST would be applicable. Only when the place of supply is in a different state, then only the IGST would be applicable. Then valuation is again a very important issue in GST, for which we will be having a separate session, that is perhaps the last session on valuation. Unlike the present valuation system of MRP and this thing, transaction based valuation, and in case of services, the monetary consideration is considered. In GST regime, there are going to be 4 models of valuation. It is either a transaction value, or it is a compared value, or it is a actual computed value, or it is the residual value. So, valuation has to be done in a particular way only. Unlike various hindrances and bottlenecks in taking Sanvat credit in today's regime, in case of GST, input tax credit would be seamless. It would be automatic, it would be seamless, of course subject to the various compliances which have been prescribed. Then interstate supply of goods for a consideration would not attract additional tax, because the additional tax has been withdrawn. There will have 33 GST laws, and in case of a company having place of supply in multi-state regime, in that case that company will have to comply with all the applicable SGST laws of different states. If you are supplying in 20 states, then you have to comply with the requirements and compliances of the 20 of the SGST, respective SGST Act of those 20 states. Then rate of GST would be prescribed in the law. Then we come to the some of the complexities in the which may happen in implementation of GST. The way accounting is being done today may have to undergo some change. because friends, what is happening is today we have the tax laws and laws, accounting standards in tandem with each other. So, tomorrow when we move to GST, either we will have to amend the income tax act also, or we will have to make certain changes and modifications in the accounting standards. For example, I will give you only one example. We have AS 9 which talks of revenue recognition. Today revenue is being recognized as per the accounting standard AS 9. It is considered to be a sale when the risk and rewards are transferred and the realization of the sale proceed is tangible. Now, the entire concept of sale changes, the entire concept of recognition of revenue changes, because in the GST regime, for the purposes of indirect tax, or that is the GST, we will have to look at supply, and in all cases supply may not be equivalent to sale. In certain cases, yes, sale and supply would be same, but in most of the cases sale and supply would be different also. So, the taxing event, when we are migrating from taxing of having a taxable event as supply, in that case how do you recognize supply in the accounts is also important. Say for example, in case of stock transfer, whether it remains with the head office of the organization or with one of the branches or one of the depots, it does not make any difference, because it is only a stock transfer, it does not have a financial implication. But in case of GST, it will be considered as supply, and GST would be applicable subject to input credit. So, there are certain other issues which will have to be addressed when we move to GST. Then stamp duty on certain transactions is important. In real estate, in certain cases we will not have the benefit of input tax credit of stamp duty paid. So, real estate sector and certain other sectors where where the items on which GST is not applicable are consumed, those will be impacted, and there will be lot of accounting issues and revenue issues. For example, Indian Railways, if petroleum products are not part of the GST, in that case what would happen, that their major consumption is diesel only. Their major consumption is diesel only, and if they can't take cent of the diesel, then their cost of providing the services is going to be much higher. Then revenue allocation between the states is going to be a major hurdle, and hopefully the GST Council would take a economic and political view on this and come out with some workable solution. In the GST regime, the Senvet credit is going to be given only on matching of the transactions, and if the transaction remains unmatched, Senvet credit may not be available. So, it may become a major hindrance in the initial stages of implementation of GST. Then the destination of service, that is the place of supply, is important. Whether the GST system will be able to cope up with the likely increase in the assessee base, which is going to be more than 80 lakhs. Then what happens to the clearance of pending cases of assessments and other assessment adjudication and appeals under various tax laws, that is VAT, sales tax, service tax, excise duty. They will have to continue, this baggage will continue for some time in the future also. Then there would be lot of challenges so far as IT infrastructure is concerned, from government's point of view also, from taxpayers point of view also, and more importantly from the point of view of the small business which may not be able to afford the IT infrastructure. Is there going to be some facility for a pooled infrastructure for them, or the government would be providing some basic facilities like service centers or facilitation centers for those types of taxpayers. Lot of improvement would be required in the banking system, because everything is going to be linked to banks. The e-payment will has to be done through banks only, and that will be a major issue. And various in trade and industry sectors are having different perceptions of GST. Some are having positive impact, some are having negative impact. So, those perceptions will have to also settle down. Now, from here where do we go? We had the Rajya Sabha approval on 3rd of August, Lok Sabha approval on 8th of August so far as constitutional amendment bill was concerned. It has now been ratified by 16 states as of yesterday evening. So, the minimum requirement of getting it ratified by 50% of the states is over. So, now it goes to the President of India for its assent, and once it becomes an act, the council has to be constituted within 60 days. That council will have certain sittings to decide upon various critical issues. Then the GST bill, the central GST bill and the state GST bills have to be, and IGST bills have to be drafted, which are the drafting is already under process. Then those will have to be enacted by the parliament and the state respective state legislatures. The rules will have to be framed, the forms will have to be notified, the IT software is being developed and which will be tested in over a couple of years. GST awareness and training is very important for all the stakeholders, not only for the government officials or for the professionals or for the taxpayers. It is going to be important for every trader in the country, and not only that, I would even say that the GST training is also required for the buyers and consumers. And then there has to be a common date of implementation for GST, which will be decided by the council. Now, the major task before the GST council is the rate of GST. What is going to be the rate of GST? That is very important. Exemptions have to be identified and concluded. They have to finally come out with a list of exemptions to which the council agrees. There has to be a negative list and some exemptions. What could be the threshold limit for the basic exemption? Today they are proposing 10 lakh rupees for all goods and services, and for northeastern states they have proposed a limit of 5 lakh rupees. For composition scheme they have proposed a limit of 50 lakh rupees, but all these limits appear to be on a much lower side, and the final view has to be taken by the council. Then the GST laws have to be finalized, the composition limit has to be decided, how GST has to be administered by both the governments, central government and the state governments. There has to be some finality to that, which has not been decided so far, and the effective working of and testing of the IT platform is important. From the organizational point of view, GST is going to impact the organization and the businesses in more than one way. The sourcing and distribution patterns will change because of the free movement of goods and services. Invoicing will have to be through computer only. We can't have manual invoices now because every invoice has to be matched for the inputs and input credits and other things. So, the entire invoicing will have to be done through a computer network only. IT systems and softwares will have to be developed. Existing ERPs and SAP softwares will have to undergo a change. Fiscal factoring will have to be done. The working capital requirements of the companies will change depending upon the holding of inventories. Supply chain management will also undergo a change because it may have the supply chains may have to be contracted. Some of the godowns may not be required. So, all those things will have to be taken care of. The compliances will reduce, but there will be more compliances so far as GST is concerned. We may not have compliances under various other laws, but compliances under GST will be more. So, because we will be required to have monthly returns, monthly reconciliations, quarterly returns, all those things will be there. Matching of transactions would be there, because if transactions are unmatched, we won't get the SANVIT credit. Accounting will also undergo a major change, and pricing of goods and services is another area of research for the companies, because once they understand, they analyze the impact of GST on their organization, they will be able to know whether the cost is going to be low or cost is going to be high. Even because of the implementation of the GST, initially there may be situations where the cost of production may go up because of certain capital investment and certain other factors, but eventually it should settle down and come down. Then business processes will also change. The way you contract with your suppliers and vendors will undergo a change. Your procurement policies will also undergo a change. Cash flows will get impacted. Warehousing pattern would also undergo a change. All these changes would be there in the organization when GST is there. So far as economy is concerned, everything is going to be positive. So far as GST is concerned, this is what is expected. The ease of doing business in India is going to improve, the GDP growth will be there, fiscal deficit will reduce, the tax base will go up, the inflation is likely to come down. The government is, if you look at the press reports, the government is eyeing for an inflation of around 4% in the next 2 years. If that has to be done, then they will have also look at the possible rate of GST. If the rate is more, then inflation may not be controlled, because effectively what will happen, friends, it will be there will be a balance of tax so far as goods and services are concerned. So far as goods are concerned, the average tax rate may come down from 26% to around 20%, but so far as services are concerned, the rate of service tax presently is 14%, which is likely to go up at least to 18% or 20%. So if that happens, the services become costlier, the goods become cheaper. So far as consumer is concerned, since he is consuming both goods and services, in some cases services more, in some cases goods more. So it will be basically a balancing exercise for the customer. So far as industry perspective is concerned, like lot of we discussed earlier, lot of issues in relation to present deficiencies like filing of declaration forms C, form D, monitoring through system based control, all those things will get improved. There will be immediate credit of stock transfer without one-to-one correlation, refunds will be automatic. There are going to be a lot of changes so far as the industry is concerned. What happens to a common man? Common man is basically concerned, see, he has to consume goods and services, no doubt, but at the same time what is concerned more about is whether GST will reduce the prices of the products. Yes, it should happen. Whether it should reduce the cost of services, no, because services are likely to be slightly costlier because the rate of service tax is 14% and most of the services are exempt also. We have 63 exemptions, 15 broad categories of services in the negative list. So if that list is pruned and the rate of service tax rate of GST also goes up so as services is concerned, then services will eventually become costlier only. Government revenue is going to increase, ease of doing business will be there, employment opportunities will increase for everyone, and one can also eye at the emergence of certain new categories of service providers in the country, basically to cater to the requirements of the small businessmen. And there will be, since the foreign investments will flow in, the economy will boost, lot of economic development will also take place, and of course there will be competitiveness so far as global business is concerned. Our exports become cheaper and we have more penetration in the global market. So this is what government is expected to do now. The presidential assent should come now. They will have to form council, then this council will decide upon the aspects of tax rate, dispute resolution, GST legislation, dual control, all these things will have to be decided. So far as businesses are concerned, what is more important is now they will have to, so far as big businesses are concerned, they will have to form a team of cross functional managers. Finance is 1, accounting is 2, logistics is 3, procurement is 4, marketing is 5. All these teams will have to, all these heads will have to put together their minds and to evaluate the aspect of the impact of GST. This impact analysis of GST to their organization is of paramount importance, and once this is done, then only they will be able to analyze what is the line of action for them. So after the impact analysis, because and if they don't understand, if don't analyze the impact of GST, they won't be able to take remedial steps or the corrective actions. They will have to make changes to their existing functions and policies based on the analysis to derive benefits from the GST. They have to prepare for the transition, and for preparing for the transition, the time is now. If GST has to come in April 17, we are only left with 6 or 7 months. So keeping this in mind, we have to analyze once we are able to know what is when the rate is discovered, 18, 19, 20, whatever. Once that is done, then they should be doing some mock exercises in that what happens, what is the impact when the rate is 18%, what is the impact when rate is 19%, what is the rate when rate is 20%, or if there are certain exemptions available to that organization, both for the output products and for the raw material or the inputs. So once they have to do detailed study of the GST impact, they have to devise new business models for efficient shift to the GST. Devising the transition strategy is also important, because if you don't take the sandwich credit today correctly, you won't be able to carry forward it to the next level in GST regime. If you don't capture your benefits today, you can't take credit in the GST regime. So for doing that, you have to comply with the law presently, and then You have to move to transit, you have to move into transition to the next phase, and then only you will be able to take the benefit of what was due to you today. Then ERPs, the softwares will have to undergo a change, the account pricing forms, pricing norms will have to undergo a change, the pricing and costing formulas will undergo a change, and you will have to analyze all the financials. Then I come to another important part of my presentation, that is in relation to the professional opportunities. What happens when GST comes to the professionals? Why we are discussing GST today? We as corporate professionals, we as company secretaries have been dealing with the company law, Companies Act and the corporate laws so far. Now, GST becomes important to us and to any professional, because GST is going to provide a basket of opportunities, professional opportunities to all the professionals, whether that professional is in employment in any organization, or whether that professional is into a practice area. So, and this is a new area, and this is a new subject, new tax law, and new tax law for everyone. So, there is no competition, or if the competition is there, there is a level playing field for every professional. So, what are the professional opportunities? One, we start with the right hand side, employment with the corporates, dealing with the indirect taxes. Today, all of us know that in all the major organizations, there is a tax department which primarily deals with the direct taxes. When GST is there, this is going to have a shift. We will have indirect tax department as the major tax department in most of the organizations, because there will be a huge stake involved in terms of credit, in terms of taxes, in terms of non-compliances, because non-compliances are also going to be very costly. We can represent before the tribunals and courts, we can, including the advance ruling, we can have knowledge management and training. Right, this is the right time, because since it is a new law, everybody wants to learn about GST. So, we have to unlearn the excise law, we have to unlearn the VAT law, we have to unlearn the service tax provisions, and we have to manage our knowledge in such a way that we are conversant and familiar, and we gather the expertise for the GST provisions and compliances. GST awareness to our clients, to the stakeholders, to the government, to the other people who want to know about GST is also important, wherein we can contribute. Client retainerships and compliances will become a major source of professional opportunity. Advisory services, redrafting of the agreements, vetting of the agreements, helping the organization to change the business practices is another area where we can provide services. Now, holistically, these are the services which we as professionals can provide. It could be tax planning, it could be internal audit of books and accounts, it could be due diligence audit for compliances, it could be tracking of the GST developments, studying the impact and telling the management about the impact analysis on their company. It could be various procedural compliances, record keeping, advisory work, consulting work. The work relating to appeals and advance ruling may come at a later stage, but yet there will be lot of professional opportunities available to them. Implementation assistance and post implementation support is also important. Hand holding of the client, advising the client or the company is also one of the important areas. This tells you what services we can provide to the SSC, what services we can provide to the government. We can help the government in tax collection, we can help the government in letting the GST provisions known to the public at large, we can help the government in compliances and due diligence, we can help the government in through the audit, various compliances. Why our profession as company secretaries can explore GST practice? Again, very important this thing. We are all professionally qualified and equipped to practice on GST area. We'll be studying the indirect taxes as a part of our course curriculum. The professionals, we possess interpretational skills as so far as the interpretation of law is concerned. Use of IT for business processes will provides us an edge to offer value-added services. We have been doing so under the MCA compliances under the Companies Act. It makes sense as to practice on the GST side, as we are already providing IT support services for MCA. which are cost effective and which will be cost effective and value additive so far as providing services to clients is concerned. The industrial exposure and experience which the professionals possess will help in assessing the carrying out the impact analysis of GST on various products and services. It is a new law and it is a new practice area. So every professional starts from a clean state, from a clean slate. So you don't have competition. You are not in the back in the queue. So all of us, it is a level playing field for everyone. And since it is a new law, it provides lot of opportunities to all the professionals. The cake is very big. It is up to the professional to decide what size of cake, what size of the cake, part of the cake he or she wants to take. There is no competition whether internally or externally. And in times to come, see, we are changing. We have moved from excise duty of 44 to GST in 2017. We will be moving from the CST of 1956 to the GST of in 2017. We will be moving from 1994 so far service tax is concerned in 2017. So we may not have a major change in the GST law in times to come. It may be there for next 50, 60, 70, 80, 100 years. The only thing is there will be marginal tinkering here and there in the provisions, but GST as a major tax law will be there. Then GST compliances will become a management and governance issue. In the GST regime they talk of governance rating. So a compliant company, a good compliant, well compliant company would be given a higher rating. So it becomes a governance issue and a board level issue. So better the compliances, more the compliances, you get a higher rating and it becomes a governance issue. We may also act as tax return preparer. There will be opportunities available for authentication, for certification with regard to returns, refunds, registrations, payments. Appearance before appellate authorities and adjudicating authorities is also opportunity given. Audit and special audit is one thing where the company secretaries have already made a very strong representation, and if that is allowed, audit will give a major boost to the profession under the GST regime. Our institute has also taken a lot of initiatives so far as GST is concerned, as already touched upon by the President at the beginning of this webinar series. We have background material and literature on GST. We already planned to have a specialized course on indirect tax and GST. There are a series of webinars we held in May and June, and this September again we are having a series of 5 master classes through webinars. There is a core group constituted on GST for taking further the initiatives in the GST. GST Corner is featured as in Chartered Secretary as a special feature now. The August issue of the journal was dedicated to GST. It is being emphasized as in the major programs, and we are having GST programs all over the country now. Lot of capacity building initiatives are being taken, and the office bearers of the institute are taking active participation with and interaction with the ministers and government officials and the members of the empowered committee, and making representations in a very bold and strong manner. This was all about GST. We wanted overview and the professional opportunities available. Thank you very much for logging in and listening to the webinar, and we have some questions and answers which we will take up now.
Sir, we have a few questions here with us. So a person wanted to know that since every state will be having a separate legislation, so every state would be having a separate rate. Can you?
No, see, GST Council is the governing body now. GST, based on the recommendations of GST, we will have different GST laws in the states. That will be a state GST law, but the rate of GST is going to be controlled and monitored by the central by the GST Council only, and there is going to be, it is expected that there will be a common GST rate throughout the states.
And sir, how is the coming of GST supposed to affect purely service industries like insurance and?
See, so far as service industry is concerned, it will impact them in the sense that the only major impact is that the rate of GST will be much higher than what is the rate of service tax today. Today service tax is applicable at the rate of 14%, or if you include the cess, which is 15%. So what will happen is the 15% straight away goes up to at least 18%, 18, 19 or 20%. So the services are likely to be costlier.
Okay. Okay.
And the major brunt of this rate hike would be in all the services, and more particularly in the financial services and banking services.
Sir, what is your take that the manufacturing states would be at a loss with the coming of GST?
I don't think so. It will happen because see, today every state is a manufacturing state, every state is a consuming state. So saying that a manufacturing state would be at loss may prove to be a wrong notion, because now what government has done, they've now ensured all the states that whatever is the revenue loss is likely to be compensated by the central government. So that no state is going to suffer any loss of revenue, either because that it was a manufacturing state, or because of the fact that it was a consuming state. So of course, because of the larger population, consuming states will have more revenue, but at the same time the manufacturing states will also have indirect benefits in many ways.
Okay. And sir, how is it affecting the exports?
Exports are going to be zero rated. Exports will become competitive so far as global market is concerned, and Indian exports should increase.
Okay. And sir, petroleum has been kept out of the GST net, so that means VAT and central excise duties would still be levied on it?
Yes. For initial 2 years, it has been proposed in the constitution itself that petroleum products would be out of the GST net for the time being, and then after 2 years the GST council would be reviewing it, that whether it is appropriate at that point of time to include those petroleum products and related items into the GST net or not. It may get extended, it may get included. So long as it is not part of the GST, the excise duties and the VAT will continue to apply on those, and because of that we will have to live with the existing excise laws and the VAT laws.
Okay. We thank you so much, sir, for sparing your valuable time and giving us such a detailed presentations about the nuances of GST. We sincerely hope that the participants benefited from the entire session. Friends, the video recording of the session would be uploaded on the events gallery of the website, and you can view the same at your convenience. The next webinar is scheduled to be held on Monday, the 5th of September. So at the same time and at the same link. So stay tuned. Thank you.